Morning everybody, it's Chris here from Serene Education with the 4 majors and this update for the 1st of November 2011. Hi guys, just been looking at the 4 majors starting with Euro against US dollar. I've got the daily open here. You can see that yesterday's candle pretty much took out all of last week's upside movement. Drastic. We thought, well, breaking above the 1400 mark here would definitely be a sign for further upside movement, primarily because the 1400 happened to be a very strong support and resistance level. Noticeably, price trading above this area for predominantly most of this year. It's only back in September when we heard the Greek issue, the bailout, etc., that we saw massive downside movement. But then we've seen the correction in the market pretty much on fundamentals. Both the German and French governments really come to the table telling us that we do X, Y, Z, and pretty much people jumping on board and trading the fundamental side. Technicals not really stacking up, but the fundamentals in this case driving the market higher. And we thought, well, if 1400 is breached quite positively, then we should be looking at ultimately areas such as here at the 14500, 14500, 14700, and ultimately way up here at 149,500, but should never materialized. The problem being is that yes, we've had a lot of good news about how the European sector is going about to try and sort out all the issues, especially with Greece, austerity plans, etc. like that, more money being thrown in it. That's all great and well. However, back in the foreground, I think a lot of other issues stemming also because of all this negativity are the next ones in terms of Italy and Spain. And Italy is a real big issue at the moment now. So great, we dealt with one issue, but we've got another one. And this is the problem with the Eurozone. It's not the case where you just deal with one and that's it. You're dealing with multiple countries here which have really bad debt issues, and it's not going to go away overnight. And this is the one problem why the euro, it just doesn't make sense in the moment now. And Ireland, Portugal, Greece, yippee. Now we've got Italy and Spain. Now Italy is the bigger of all of them, with debts in excess of 1.3 trillion euros, which is crazy. So yeah, I mean, what's happened now is Europe wants to know if Italy can actually start trying to rein in this debt. They're going to have to try and come up with measures, IMF, etc., all interested in to see how Italy's going to actually go about trying to lower its debt issue. But that's not going to happen overnight, though, and this is the problem. And I've always said it along that this was never ever going to work, just throwing money at things. It's far better. I know it's the worst case scenario, but it's far better to have them fail and them to live another day than for us to keep throwing money at something that's never ever going to actually it's never ever going to work. So I think what we're seeing at the moment now is a huge correction in the market, primarily because now Italy is another big issue. And as it stands now, there's a lot of negative vibes coming out of Italy. So this is really going to play havoc on the minds of the traders out there. And this is what we're seeing, this massive correction in the market. Yeah, a lot of upside, but still this upside is driven primarily on fundamentals. It's not the technicals. And a lot of the technical traders out there see it for what it is. And the reality is that things just don't stack up at the moment for Europe. And the longer we keep trying to throw money at a problem that's far greater than anything, it's just not going to happen. So that's what we're seeing at the moment now. Correction. Ideally, if you want to still see further upside movement, it has to be trading above 1400 and staying above it. I did mention yesterday in the downside, we saw the Asian market really carrying it lower, that we needed to see a bounce at 1400. That did not materialize. And so it gave us a good idea to go short yesterday at the break of 1400, which a lot of our students did. And a beautiful trade to the downside. And the CTC really came to the plate yesterday. You can see 1400 definitely being breached. A lot of sideways motion as we go through this correction ferrule here, but the break of that, the continuation, and you can see the lower swings dictating. Entry here below 1400 would have definitely looked at 1390 as your first target, 13800 as your second, and ultimately going back down to 1375 and 13700 is a potential third target in this. So as it stands now, all the CTC 5 minutes, 15 minute, 30 minute, hourly, 4 hour, all selling. So you can definitely see that the momentum is definitely shifted to the downside, and we should be looking for further opportunities for shorting. So as it stands now, we've seen a break this morning, sorts consolidation, but look for potential breakouts to continue that downside movement. Next up is sterling. Let's have a look at sterling. Yesterday was very, very interesting. We saw, we've always known that 1600 had to be breached, and we saw a lot of headbutting prior to the breakout that we saw on Thursday. Then Friday going into the upper bandwidth here, but definitely a consolidation on the underside of this very strong major support and resistance level. You can quite clearly see here that actually held price above for quite some time, most of this year so far. We had a break as Euro did quite recently in September. This is to do with the Greek issue, and the CTC was well extended to the downside, and you would have profited quite greatly from that. Since then, we've also had a bounce at the 13,500. This is psychologically also a very strong support and resistance level, because we saw price really bouncing on this a number of months back in September of last year and through December of this year. We've seen that as a very strong support area, and sure enough, there was a psychological bounce, even though we had a lot of negativity going into that. I think a lot of people here who would have looked at a break of 1600 would have psychologically had their first target or ultimate target down here at 13,500, and as price went to it, a lot of people started selling there, buying back their positions, and we saw a massive bounce. We saw correction, a lot of hammers here, failure yet again at 13,500 to close lower, and we saw a position to go long. And then we saw fundamentals pretty much also driving the market to the upside here. And what we saw yesterday was price failing to close lower than 1600. Okay, this is very, very important. I always mention that going into the US session, if price could actually still be trading higher than this upside trend, then we could be looking at a potential bounce on this trend line, upside trend line, bounce, bounce, bounce. And sure enough, going into it, we saw the 4-hour candle sitting on this candle, but it failed to close lower than the 1600, the 4-hour candle. Look at that, still stayed above, and by doing so gave us confirmation we were likely to see a further a potential bounce at this area. So you looked at for the next candle, the hourly candle, to close on the 4-hour, and sure enough we saw that upside movement. And here again, I myself and some of my students were able to profit to the upside back up to the 1500 mark where price had been to before. Since then, still failed yet again to break above 1615, and we saw price pulling back. You'll notice now the 4-hour candle as it stands now is reattempting this upside trend. And still, you can see price has moved all the way down, but we've seen a contraction, a consolidation to the upper end of this wick. And as long as this candle can close higher, then we could potentially see a hammer on a trend and above a price support, which could see potentially further indication of upside movement. So it'll be interesting to see what this next 4-hour candle closes. Where it closes, whether it's at the underside of this upside trend or above. If it is above, then potentially be looking for further upside movement. If it closes lower, then 1600 still needs to be in play. It's got to stay. It's got to remain above 1600. If it remains above 1600, then we could see a correction to the upside. If it fails through to close above 1600 and we see a bearish engulfing and it closes lower, then we should be looking for further downside movement and look at 15900 as a potential first-time target, and ultimately way down here at the break, roughly at the 15800 where we saw price there again find a lot of resistance, and below that ultimately another one down here at the 1560, just below the 15700, we saw further consolidation, which is going to bring us back to the institution moving average. So the next 4 hours is going to be quite interesting. If we get that bounce in the 4-hour chart here, then we could be looking for further potential upside movement for the remainder of the day. Failure to find a bounce at this trend line here, we could see a correction at a reattempt at 1600, and a failure at 1600 could see price breaking the potential long-term support and resistance, and we should be looking for bearishness further to the downside. Next up is US dollar Swiss franc. Very interesting setup, this one. I mentioned yesterday, or going into this the past couple of days, that we needed to see price, even though we saw downside and huge correction on the upside of this after the this particular currency pair being pegged by its government. Swiss franc has pegged its currency. We wanted to, and this is where it took it above on the euro Swiss franc, above the 120 mark, which happens to be the 8600 mark here on the US dollar Swiss franc. So price was, they want price to be above this area and trading above it. They don't want to see price trading below this at all, because they seem to think that the Swiss franc is overpriced, and they want to try and bring it down so that it's imperative or close. It's a lot cheaper to trade with its euro counterparts. Very, very important for for Switzerland in terms of GDP, etc. like that. It's just normal. However, we've seen a massive correction since then. We saw price trading above 9300, and then it failed to do so because that happened to be a very strong price support and resistance level here. you can see quite clearly going back in time that we saw a number of bounces on support and a lot of resistance on the underside. 9300 failing to break higher, a massive bearish engulfing candle which cancelled out all this upside movement here, giving us an indication that the price failed or does not want or did not want to be up at those levels anymore, and then we saw a break of that, and then you would have been able to get into this trade, the break of this 900 to look potentially at back here at 8700 as potential support or target, but ideally back to 86. Now great, we went down to 86, but we needed to see a bounce. Cycler, we need to see the bounce because it was important, because if price had broken lower and we'd seen the US dollar go below the 8600 mark, it would have probably seen the euro Swiss franc also trading below the 120 mark, and by doing so it would have probably meant the Swiss government would have more than like, I'm not saying it would have, but we could have seen another intervention call on them, because they don't want, they've always stated that they want a price to be above 120, which is the 8600 on the US dollar Swiss franc. So massive correction going on, massive downside selling into that, but then a psychological bounce, because I think anybody who had actually been selling up here would have looked at that as a potential target, because they would have known if it had gone through here, then it would have been more likely for the Swiss government to actually intervene, and we could have seen a huge price a correction in the market. It has found support. Look at that, a very small trading range, a little support over here, and yesterday's candle very bullish. This is pretty much a morning star and a price support, so a very good start to this. We'd like to see another bullish upside candle to definitely confirm this is a morning star pattern where we had a downtrend followed by a correction at a support, a very strong support and resistance, which happened in this case to be 86, because it is a psychological support, because this is where price is being pegged at, okay, on the US dollar Swiss franc, which is the euro Swiss franc equivalent of the 120. Now we have a massive bull up candle, which now, and you can see the Asian market is trading higher, and we are breaking the, well, testing this downside trend. If we can close higher on this downside trend, then we'll actually cancel that downside trend, and by doing so, then we could potentially look at another attempt to the highs here at 905, which happened to be a price swing, and then ultimately back up here at 9300. Importantly, we are trading by the institution moving average and the 50, which is great. Those two have crossed over. It's just the 20 we need to get above, and I think if we could see price trading or going higher, then what we could ultimately see is another attempt of 905, and ideally the highs. I'm just trying to change this. Sorry guys. Back up here at 905 and 930. So it'll be interesting to see if we can stay above this area here. Noticeably, there's happened to be a price support and resistance quite clearly here, just above us. So do need to see price trading higher than the 8850. So if we can see price trading above 8850 going into the US session, then we could see ultimately price push moving higher. So hourly chart, you can see the institution moving average being broken yet again, which is a good sign, and this is that bounce we've seen on the hourly chart, higher swings dictating upside movement, CTC in our favor. So if you had looked at potentially a opportunity for a trade, you would have looked at potentially the break of the high here, for example, going into the morning when we saw the yen pair intervene. We saw the Japanese government intervene. We saw the US dollar rally on that news across, and the US dollar did really rally against its counterparts, the majors in particular, and then we saw a pullback going into the European session open, and that pretty much gave first that we're going to see a potential pullback, which occurred, and then what you wanted to see was price break higher, which would have given you a signal that we are now trading higher. Previous break over here, for example, you can see going into the latter part of yesterday afternoon on the US session, price really rallying towards the end of the day and breaking higher. Now we're looking at potentially the highs over here at 8860 as a potential first time target. Ultimately, we want to be back up here at 905 is going to be the next big one, and then 930. So there's a lot of space here in between these, which is great. So this morning, as I mentioned, if you can see price trading higher or keeping above the institution moving average, but trading higher than this area at 8860 going into the US session, then it would look potentially as long-term trade to at least 905 and ideally to 930 again. So as long as this continues, this movement continues to rally, then we should be looking for further gains through the remainder of this week. Last pair of the day is US dollar Japanese yen. Here we're seeing a massive correction or intervention from the Japanese government, which has seen price really rally on the daily. You can quite clearly see that. However, towards the end of the session yesterday, we saw a very dramatic pullback. And then last night's trading, we saw the Asian market really taking it higher. However, going into the European session open this morning, we've seen price happening at the bottom of the wick. Okay, all I've done is taken a fib retracement of this upside candle, just a plot where price is trading where these fib extensions are. 38.2 is just below us here at just below the 7800 mark. If we can see price finding support here, and then fantastic, then we could see possibly a correction and continuation to the upside. A failure to find support here would see momentum still driving low, and then we should look at probably the 50% area here at the 7750, which would take us back to prior support and resistance that we've seen quite recently, notably here in September and just recently here in the early parts of October. So that would be our first potential target. A failure to find support here at 7750 and a break low would essentially be looking at the 61.8 fib extensions. The next potential target here at 7700, which happens to be price support and resistance on the smaller time frames. And a break below 61.8 then is a total failure of this upside movement, and then we should be looking back down to 75.50 where we come from as our next potential target. So if this is to rally, we need to see price finding support around the 38.2 fib mark to see a potential upside move. Failure to find support here could see the shooting star really taking shape, which will show us a lot of exhaustion to the upside, and we should be looking for selling to occur to the downside. And a break below 7800 and a close lower here on the daily, so going into a 4 hour, etc. like that, would definitely confirm we should be looking for further shorting opportunities. Notice the CTC, even though we've had this massive upside wick, is still looking negative. Okay, that's the beauty of this trade. We're still trading below the institutional moving average, and we're still trading in a consolidation range against the major trends. So as it stands now, we're not looking for any buying opportunities if you're looking at the daily or higher until we see a break above 80, which will take us back to the prior breakout of this long-term support and resistance level, and it'll see us trading above the institutional moving average for the first time since early April of this year. So as it stands now, what we want to see price do is show us her hand. In this case, we want to see the 38.2 fib on the daily time frame actually acting as a support. We can see a nice candle here finding a bullish engulfing candle here on the support area in the next couple of days. Then that could definitely clearly indicate that we should seeing a correction in the market after this massive move, and we could see the second extension occurring. A failure to find support here at 7800 would potentially show us that the momentum in this upside movement is exhausted, and because price action is happening in the bottom end of the wick, they're telling there's more selling contracts being filled than buying, and we should be looking at the next potential target here at 7750, which happens to bring us back to price support and resistance as our first target. Second target 61.8, and ultimately a failure of 61.8 would tell us that this move to the upside here has failed to really this intervention here has failed to really move the market in the favor, and ultimately psychologically we're still looking short on this pair long term. So keep that in mind. This gives you a really good indication. So if you look at the low of the candle, draw your fib retracement, you'll notice that there's more price action. You can see price happened to find support here yesterday in particular, and it stayed above it, and we saw a rally to the upside. If we can see price still staying above this area here at the 77.90, 77.90.50, then ideally we're going to see a potential bounce higher. Failure to find support here and a close low would definitely look at 77.50, 61.8 would be our second target, third target way down here at the 100%. That's it, guys. Hope you have a fantastic trading day. Please ensure that you follow up your trades with brilliant money management. It's important to do so. Wait for the market to give you an indication of what's likely to occur, and then we act on it. So if you can be patient, you'll find that you'll be a lot more profitable. Don't second guess the market. Okay, so rather look at the bigger picture, see where she's trading in conjunction of where we have price support and resistance. Are we likely to see another bounce? And you're saying to the market, listen here, this is what I want you to do, and if you do that, then I'm going to do this. So as I've done here on the US dollar Japanese yen, is I've actually said, okay, great, if price happens to find support yet again at 38.2, then it's confirming that there is a very strong support level now being forged at this area, and we should be looking for likely a further extension higher. If she does fail and close lower than 38.2, then we should be looking for further bearish sentiment in this particular setup, and we should be looking at targets to the downside. We know at 77.50 we had prior resistance before back in early October, so that will be our second target. And if a break below that, then ultimately the sentiment is really looking bearish, and because we are still bearish long term, then we could see that sentiment following suit, and we should be looking back at 61.8 fib, or ideally back to the 100% as our next potential target going for the remainder of the week. That's it. Hope you have a fantastic trading day, and I'll see you tomorrow. Trade serenely.